might notice we have a different Leah in the chair today, but I'd like to introduce Leslie Wolf. She is filling in for Leah right now, and also thank John Gaunt for coming over to help and assist. For those of you who don't know, Leah was a little sick yesterday, so she is hopefully getting better. And on a personal note, it's things like this that make me realize how much I take for granted all the work that everybody does. Leah does an amazing job. Leslie has stepped in and hasn't missed a beat, and I really appreciate everyone from the office staff to our revisers and research that they really go above and beyond, and I just wanted to take a moment and thank everybody for that. First item of business would be a request for bill introductions. So, yes.
Thank you, Mr. Chairman. I'm requesting two committee-sponsored bills. They are 26 RS 2537 and 26 RS 2931. Both of them, it's a one-time elimination on property tax and on the initial purchase of a vehicle, new or used, and they're two separate bills. That's what I have.
Okay, thank you. Any questions, committee? Any objection? Seeing none, the request is approved.
Thank you, Mr. Chairman.
Thank you. Are there any further requests for bill introductions? Seeing none, we will turn to our business item of the day, and that is a briefing on the tax expenditure report. We'd like to welcome Secretary Burkhart from the Department of Revenue. I hope everybody's got their energy drink. If you've studied this report before, it is it's a long, lengthy report, and I appreciate the Secretary being willing to come and give us a kind of an overview on that. And if there are any of the subject areas that we want to take a deeper dive into, we might ask the Secretary to come back at a later date and maybe expand on those. But Mr. Secretary, it's all yours.
Thank you, Mr. Chairman, members of the committee. Again, Mark Burkhart, Secretary of Revenue. When I appeared before the committee previously this year, I had provided you a copy of the tax expenditures report, and hopefully that's at your disposal. So let's go ahead and delve into this. And just for your information, this report is prepared annually by Kathleen Smith and her staff of economists. Quite extensive information, as you will see as we go through. So if you will flip over a couple pages to page 1 of this document, you will see a very quick summary of the impact that many of the legislative enactments have had over the years, how it impacts state tax receipts. And we're going to go into a little more detail in a few pages, but you'll see on page 1 that for changes that actually enhance revenue, those statutory changes were in the neighborhood of $94 million in additional revenue. And if you look at the column beneath that, that's in red, that shows the impact of the various exemptions, subtraction modifications, and that totals a little over $11 billion of revenue foregone. So just a very quick summary. So let's turn to page 2.
Mr. Secretary, we have a question from Representative Sawyer.
Yeah, your fourth line down there, the Kansas sales tax exemptions, fiscal year 2025.
Yes.
What does that $9 billion? What all does that include? Is that like?
That's just state general fund impact. Is that? I'm not sure I caught the question.
Well, okay, but that's like state government agencies. I mean, when that $9 billion is like everybody has an exemption. I'm sorry. Oops, I can't pull it. Is that better? Okay. So that $9 billion includes all sales taxes, including like government exemptions?
Yes.
Okay.
All sales tax exemptions.
Okay.
Yeah, I think that starts further down on the report. It looks like it's page 14 of the report. It's actually page 17 on the PDF file, but that's where it line item every single one, but it is all inclusive, it looks like. Yes.
Yeah, and we'll go through a number of the major sales tax exemptions, but a couple of those sales tax exemptions are over $1 billion themselves. And we'll get into those in detail. But again, unless there are other questions at this point, let's move on to page 2. And we can just briefly review the individual income tax analysis that's there. And I need to explain up front sort of the time lag for the department to get income tax information available to you. So this report shows subtraction modifications, addition modifications on the individual income tax, corporate income tax, and it's really for tax year 2023. And you're saying, well, it's 2026. Seems dated. 2023 tax returns are filed in 2024. Many of those are extended. They don't get filed until October for individual income tax returns, and corporates even later, a month later. So that's when the returns come in, and then we try to extract the information from those returns. And it's also important to note, as part of this process, and I think we discussed this, for individual income tax return, roughly 93% of our returns are filed electronically, which is great, because that allows us to extract that data very quickly. The others come in on paper, and when you toured the channel management section, you saw the equipment we have that converts the data from paper format to electronic format. And that database is where Kathleen and her analysts extract the information when we do fiscal notes. It's important to know that. And when we get to the corporate section, it's even a little more complex. First of all, there's no statutory requirement that income tax returns have to be filed electronically. For corporate income tax purposes, what slows down the process somewhat in gathering the data is that some of the largest corporations in the country file their returns in paper. And I don't mean a paper form, I mean boxes and boxes and boxes of documents. You can have large corporations that have hundreds of subsidiaries, LLCs, et cetera, and that has to be sorted through by someone who's knowledgeable. So that in itself complicates the gathering of data in the corporate context, and we'll talk about that in a minute. But just wanted to let you know how this data is gathered. And on page 2, since we're talking about 2023 returns filed in 2024, that analysis that you see, that description of the income tax statutes in place at that time, you'll see they're different than what they are now. We still had the old 3-bracket system. Of course, that's all changed now. And as you know, when we are looking at adjustments, whether they're positive or subtraction adjustments, to arrive at what is considered Kansas adjusted gross income, we start with the federal adjusted gross income on the federal income tax return. And from that, we have a statute, 7932-117, where we can make additions to that number or subtractions. And that's where we get into our addition or subtraction modifications. And that's all statutory in Kansas. But under the conformity principle, Kansas is a rolling conformity state. whenever the Internal Revenue Code changes and they make amendments that affect federal adjusted gross income, Kansas automatically adopts those changes. And if we don't want those changes, then we make modifications. And that's where your subtraction modifications typically come in. So that's all I'm saying initially about the individual income tax. If you flip over to page 3, the fiduciary income tax is basically the income tax that's applied against estates and trusts. So and we don't have an extensive number of those, but again, conformity principles apply there, and we start with what is reported to us on the federal return. So let's look over to page 4, and you will see some data, and we're talking about process year 2024, so those are 2023 individual income tax returns filed in 2024. And this data on page 4 is for resident returns. And if you look at the top of that page, you'll see the addition modifications. So we start with federal adjusted gross income, and we may add certain amounts back. For example, let's just look at line 1, where that modification, state and municipal bond interest not specifically exempt from Kansas income tax, that gets added back into federal adjusted gross income. If you look to the right, you'll see 39,000 taxpayers had that modification, and that was $13 million. That increases Kansas adjusted gross income, okay?
Mr. Secretary, could you give an example of what that would be? What is bond interest that would not be exempt?
I'm assuming it covers most of the bonds for local projects within municipalities, et cetera. Kathleen?
Mr. Chairman and members of the committee, Kathleen Smith with the Department of Revenue. Let me do just a little bit of research and I'll get right back with you.
That's just fine. Thank you.
I'll have it in just a second.
Okay.
But in general, the feds won't include that interest in federal adjusted gross income. That's why Kansas adds it back. And we can get this, I think, even in our instruction booklet, we have an enumerated series of types of bond interest that would be included under that modification. And again, 13 million enhancement to the tax base because of that modification. You know, there were just a few positive modifications or addition modifications there, but in the statute, there's actually 29 different add backs. So the list is pretty extensive. Dropping down to the middle of the page, you'll get to the subtraction modifications. And this is where there might be certain income included, again, in federal adjusted gross income, and we have to subtract certain types of income out of that. And a lot of this is just a policy decision that the legislature has made. But this first item is not. We have to back out interest on U.S. government obligations. States cannot tax interest on federal obligations. We've got a problem with the supremacy clause in the U.S. Constitution that prevents us from doing that. And if you can look to the right again, you'll see almost 70,000 returns are impacted by that, and that lowers federal adjusted gross income by 15 million, again, for process year 2024. And you can look down and you can see some of the really larger numbers. Get down to the middle of the page. Retirement benefits specifically exempt from Kansas income tax, 143 million tax impact for that modification, that subtraction modification. So state general funds receipts are reduced by that amount. So in the next couple days, I think you have some hearings that'll be coming up on some bills. One of them, Senate Bill 2445, seeks to have a subtraction modification for certain qualified health care sharing expenses. That type of modification would show up in this schedule if that were to be enacted, and there would be a negative tax impact from that particular addition to the subtraction modifications. So, and then at the bottom of the page, you just have your standard deduction or itemized deductions, and you can see how much that impacts state tax receipts, and then the exemption allowance. So pretty significant numbers associated with those two items, which you're obviously very familiar with. The page 5 has the same sort of information, but it just deals specifically with non-residents. And you can see lesser amounts involved, but again, same sort of modifications apply whether you're a resident or non-resident. Flipping over to page 6, you will see a rather extensive table of tax credits that are available to individual income taxpayers, and whether that's resident or non-resident. And you can see to the right, again, the specific impact that those those credits will have on state tax receipts. And again, looking down for some of the larger ones, again, almost mid-page, you'll see credit for taxes paid to other states, over $500 million in credit, which reduces state tax receipts. Trying to see if there are other, you have your earned income tax credit, that's $76 million. So again, I think in a day or two, you're going to be having a hearing on a new credit or a modification to an existing credit, the short line railroad credit, House Bill 2469. And so if that were to, again, be enacted, the effect of that particular change would be reflected on that line in future reports. So that's the list of credits. And again, this is for individual income tax. So moving on to corporate.
Oh, Mr. Secretary, I apologize. I was
Okay.
looking at the report. Did you explain when something's listed as confidential, what's the threshold on the number of filers that you have to put that as confidential?
At this point in time, if there are fewer than 5 taxpayers claiming a credit, it's deemed to be confidential because purportedly somebody could figure out who the taxpayer is. I'm not sure I totally subscribe to that, but that's what the number is.
Yep, I understand. I remember we've seen that before, and I just couldn't remember what that limit was. So, thank you.
So, moving over to page 7 is the corporate income tax. And corporate income tax is just like individual income tax. We conform to what occurs at the federal level, but for income tax purposes, we're looking at federal taxable income, and then we make modifications to that amount. So we just pull that number off the federal return, and then we make the state modifications. If you look over to page 8, you will see the modifications that appear in KSA 7932-138. But keep in mind that all of the modifications that exist for individual income tax also exist for corporations, plus these modifications that are specifically set forth in 7932-138. So we're really pulling modifications, both addition and subtraction, from two different statutes when we're dealing with corporations. And again, on page 8 are the sort of the corporate modifications in addition to those for individuals, and you can see the impact of those on the right. Let's look at 7932. Let's see, at the top of the page there's a modification for federal net operating loss deduction, and this is an interesting one. When you arrive at federal taxable income, the federal net operating loss is taken out. This positive or addition modification adds back in the federal net operating loss. And then when you drop down a little bit to see the subtraction modifications, you'll see a Kansas net operating loss. We compute our own net operating loss, which is different than the federal. And you can see the impact of that. That has a negative 37, nearly a 37.5 million impact, negative impact on the state receipts. So again, flipping over to page 10 then, moving past the modifications, you will see the credit table, and you'll see a lot of credits that are not claimed by many individuals, and that information is confidential. But last week, or the week, I'm trying to think, last week when you had your joint meeting with Senate Tax Committee, you were talking about HPIP credit. And if you go down midway through this table, you'll see the high performance incentive program credit. We had 304 corporations claim it, and 137 million was claimed. And, or that was the impact, negative impact on state general fund. So this is one of those areas, we had spent a lot of time coming up with the HPIP numbers. And again, it's very intensive work for examiners to look at the largest corporations, because it's paper returns and boxes and boxes and boxes and boxes of data has to be captured in order to come up with numbers like this. So turning over then to page 11, we're getting to the privilege tax. And again, this is a tax on banks, savings and loans, basically for the privilege of doing business in Kansas. Because banks and savings and loans hold federal instruments, we can't impose an income tax on that. How do we get around it? We don't impose an income tax. We don't tax that income. What we do is we impose a tax that is for the business of doing business in Kansas, measured by its income from the prior year. So could be a matter of semantics, whatever, it's legal. So if you look to page 12, you'll see for process year 2024, again, all of the modifications and addition and subtraction modifications that are available to privilege institutions. I'm trying to recall, and I don't off the top of my head, but I don't know how many corporations we have, 50,000? Anyway, we have thousands, many of whom don't pay any tax, but the number of privileged institutions is in the hundreds, probably less than 300. So, okay, so that's on the income side, income tax side, and privilege tax side. Be happy to answer any questions or just move forward.
Any questions, committee? Representative Smith.
Thanks, Mr. Chair. Mr. Secretary, thank you. I was just wondering, the corporations that have boxes and boxes and boxes, can't we make them file it electronically or?
That would require a statutory change.
But that could be done now.
Ostensibly, that could be done. Right now, the legislature has mandated electronic returns from anybody filing a sales tax return. And we get 98.5 or 99% of sales tax returns filed electronically. So,
Thank you, Mr. Secretary. Thank you.
Do we need to go back to the order of business request for bill introductions?
yeah. It is an interesting process. And again, when you were taking your tour of the channel, you probably saw rows and rows and rows of boxes.
Do other states have paper return or require electronic returns? What do other states deal with?
I'm not sure what all other states do, but I'm sure there's a blend. But,
Interesting.
Yeah. So then let's turn to Kansas retailer sales tax on page 13. And we can start going through just in general how these various exemptions are categorized. And the list of exemptions has really expanded over the years. And when you're looking at sales tax exemptions, you have to keep in mind that some of the exemptions that we have to have them either for legal reasons or, and I'll call it conceptual reasons because of the type of tax we have, and then others are just policy decisions. So let's get back to the legal exemptions. Anything dealing with the federal government, we can't tax. So if you look at the top of page 14, under legal exemptions, you'll see most of those just relate to purchases that might be made by the federal government. You know, we can't tax the federal government. And that's primarily because of the supremacy clause. We can't do it. It's unconstitutional to do so under the U.S. Constitution. Another exemption that applies is that we can't impose a tax on any purchases that might be involved in interstate commerce. Again, Congress is the only one authorized to deal with interstate commerce, and states have no say-so in that area. So those exemptions, which reduce state tax receipts by $155 million, you don't have any choice on those. Those are legal exemptions. The next one, on the bottom of page 4 and starting on really on page 15, these are more your, what I would consider to be conceptual exemptions. Our sales tax imposes tax one time. That is on the sale to the final consumer. So if you are manufacturing a product, there is no sales tax on all of the various steps that might be involved in reaching that final product. So ingredient or component parts, labor, whatever, all of those intermediate steps are not taxed because of the type of tax that we have. Tax is imposed on the final sale to the consumer, okay? And why is it done that way? Because the cost of a good would be astronomical if you impose tax on every step of the process, including the ingredients that go into that final product. So those are conceptual exemptions, and you can look there, and these exemptions is where you really get into having a major impact on receipts. So if let's look at one here, the ingredient or component part exemption. 2.9 billion of foregone revenue. based upon that exemption. And you drop down a little further, this is a farm state, you have a lot of purchases that are made to arrive at the final product in the farming industry, and you can see that the exemption for all of those ingredients, if you will, purchases made for the production of food for human consumption, all of that is almost 1.2 billion. So just for those exemptions, which are, again, required because of the type of sales tax that we have, tax imposed on the final consumer, is, $4.8 billion. So now, dropping down at the bottom of page 15, this is where you get into what you deal mostly with constituents that might come to you, and these are policy type exemptions. And if you look again at the bottom of page 15, and let me explain before we get too far into this section. If you look, let's see here. If you look to the right column, and you'll see just a dash there. There's nothing else but a dash. That means that the fiscal impact, the negative fiscal impact to the state treasury is less than $100,000. So it's between 0 and 100,000. If you look back a little further, just to note the difference, if you look back at page 18, you'll see some asterisks that are inserted there. Those exemptions, we can't report them for confidentiality reasons. Again, all of those exemptions basically apply to one taxpayer. And under the statute, because this information is derived from forms that are filed with us, we cannot disclose statutorily what those numbers are. So again, at the bottom of page 15 and carrying over, this is one of those areas where there has been some discussion about
Mr.
whether...
Secretary, we've got
sorry?
a question from Representative Wolf.
Thank you, Mr. Chair. My question is, when you asterisk it or you hyphen it, do you still add the total into the bottom total? Is the total correct, or do you just not include those?
It is added in.
Okay,
We just can't
appreciate
disclose.
that. Thank you.
There has been discussion. I'm not sure there's been bill drafts. There may have been drafts, maybe nothing introduced. You are oftentimes visiting with constituents who have a particular sales tax exemption for a 501c3 doing this type of charitable activity or religious activity. And, that accounts for a number of these exemptions. And of course, this area is the area where if a blanket 501c3 exemption were allowed, that would eliminate many of these exemptions that are particularized to a certain type of charitable activity. So,
Mr. Secretary, this might be a question more appropriately addressed by the reviser, but if we're trying to clean up, let's say we did pass a kind of a blanket 501c3 exemption, could we actually clean up the statutes, or would they have to remain on the books? How does, when they apply and receive their sales tax exemption, does it refer to a specific 3603 ABC, or how could we help try to clean up the statutes if we did do that?
Kathleen can correct me, but if a specific exemption is given to an entity, the exemption authorization, the statute, is specified. And
so it lists the direct statute
right
in there.
And
okay.
Kathleen can correct me on this as well, but these are renewed every 10 years. I'm corrected, 5 years.
5 years. Okay.
Yeah.
So when you say renewed, they're obviously, they have the statutory authority, but they have to reapply with the Department of Revenue every 5 years.
Correct.
Okay,
Correct.
thank you. Please continue.
Okay.
Representative Sanders has a question, sorry.
Thank you, Mr. Chair. So are there some 501c3s, for lack of a better term, of a questionable nature?
I guess that's sort of up to the
Yeah.
beholder.
Oh, okay, so then I guess my question would be, if we were to do a blanket 501c3 exemption, could we first go through and maybe see that everybody that would be included in that is an organization we would want to be included in that? Could we remove the ones that may be of a questionable nature if some exist?
That would be a pretty daunting task to try to identify all 501c3s and what their purposes might be. The IRS has its own extensive review before a 503 or a 503c3 designation is allowed. And sometimes they're allowed, and then after the fact, they're disallowed. And the IRS has some pretty strict criteria for that designation. But, you know, I'm trying to think, if we had a list of all of the 501c3s authorized by the IRS, it would be challenging to determine through that whole list who was legit and who wasn't.
Thank you, Mr. Chairman.
Yeah, and you might end up in a perpetual chase there, because if you would exclude them from that exemption, you'd have to exclude them by name, and they could theoretically change their name and continue doing business, and then you'd have to keep chasing that name change all the time. But I'm sure somebody would find a way around it. Any further questions, committee? Seeing none, please continue, Mr. Secretary.
Okay, then let's move past charitable and religious. Let's move to page 20. And these are consumer exemptions, or the category of consumer exemptions. And again, this involves specifically policy decisions by the legislature. For example, the state of Kansas does not impose state sales tax on the sale of gas and electricity. Locals can still do that, but it's not at the state level. Again, that's a policy decision that was made by the legislature. So if you go through that list, you can see that those types of policy decisions account for a $823 million reduction in state general fund receipts. So at the bottom of page 21, in the category of governmental exemptions, here, again, we have decisions made by the legislature that certain types of purchases will not be taxed depending upon who the entity is. Direct purchases by the state of Kansas are not taxed. Not-for-profit hospitals, educational institutions, actually that drops down into the next category, but again, the legislature has made that the determination that these types of entities should not have to pay sales tax on their purchases. You add those up, and again, these are the governmental exemptions. It's almost $2 billion in foregone revenue from those exemptions. Then the educational exemptions, kind of touched on this just briefly, just some of the purchases that might be made by elementary or secondary schools and educational institutions. You can see that those types of purchases, textbooks, et cetera, 209 million reduction in state tax receipts. Bottom of page 22, moving on to healthcare exemptions. Again, one of the big ones there is an exemption for prescription drugs. If you look at that, that's in itself is a $110 million reduction in state general fund receipts. Moving down toward the bottom of that page, agricultural exemptions or agriculture exemptions, farm machinery and equipment, again, seeds, tree seedlings, fertilizers, things of that nature, purchase in the farming operation, and those add up to almost $200 million in foregone revenue. Exemptions for certain types of services. Again, policy decisions made by the legislature over the years. That first one, coin-operated laundry services, is one. I think this category might be the one with the least fiscal impact to the state of $6.36 million.
Mr. Secretary, Representative Sawyer has a question.
Yeah, I am curious if we have numbers. These are things that are specifically exempt, but don't we have large groups that just aren't taxed? Like if I get a haircut, I don't pay sales tax. I go to the beauty salon, I don't pay sales tax. Buy a digital book, I don't pay sales tax. Do you have numbers for those kinds of things?
Mr. Chairman and members of the committee, Kathleen Smith with the Department of Revenue. So like professional services, is that what you're kind of thinking of? We'd have to do some research and try and come up with an estimate on that.
Okay, and think of like digital goods and stuff. I mean, I'm just thinking of some of these categories that we haven't specifically exempted, but we don't tax, which could be a significant amount of revenue.
Right, right. We can do some research.
Thanks.
And there are certain areas where certain types of services are taxed in Kansas, but in general, anything of a professional nature is not taxed, and those taxes would be significant. I think estimates may have been done in the past on that. And another area that other states have ventured into are the digital goods. You go to a bookstore and buy a book, you pay sales tax. If that book is delivered to you in digital format, you don't. So does that make sense? Some states think no. It should all be part of the tax base, and there shouldn't be a distinction between the two. So, and I think some work has been done in that area to gather data that would be able to be utilized to provide an estimate of what could be part of the tax base. So, again, moving along, and we're almost to the end of sales tax. I told you there were a lot of exemptions. Exemptions for businesses, and this is the exemption where we, you might have a manufacturing machinery and equipment. That was passed years ago under the Hayden administration, and it was basically done to make Kansas more competitive and attract more business to the state. That particular exemption is $269 million reduction in state general fund receipts. So the bottom line is, when you add up all of these different categories of exemptions, the total is $9 billion in foregone revenue to the state. So again, trying to keep things moving here. Very briefly, Kansas mineral tax. This has been on the books since 1983. There are a number of exemptions that exist for low production wells and certain other modifications. There's a property tax credit that's taken into account, and that accounts for the largest reduction in tax receipts associated with the mineral severance tax. I believe we talked about that briefly during the summer at the Special Committee on Taxation, but in general, when you compare the receipts, again, it was enacted in '83. It was bringing in over $100 million, and now it's much, much less than that, under 50, maybe under 40. So let's move on to motor fuel, and you can see there what the reductions in revenue might be depending upon the exemption or exclusion. You have things like, when you have a motor fuel tax, it's supposed to be imposed on fuels used in vehicles on the road. Well, let's have garbage trucks. Garbage trucks use gasoline to move through your city streets, but a portion of their usage of gasoline is to use the crushing equipment. So there is an allowance given for the gasoline that's used to power those units. Again, you get a sense there of what receipts are foregone because of these particular exemptions or expenditures. Page 28, again, don't really want to spend too much time on this. I think it's been before the committee so many times, and I understand it will be perhaps before the committee again on some effort to try to consolidate or simplify the homestead programs, which would be a very good objective. This is one of those areas that can be very confusing for taxpayers, and we spend a lot of time educating taxpayers. But you can read through that and get a sense of, at least for this processing year, the foregone revenue from those. And on page 29, again, this was still in effect back in tax year 2023, where we used to allow a food sales tax credit on your tax return. That's no longer the law. When we exempted food from the state sales tax, this provision was phased out, wasn't needed any longer. And then finally, the Kansas Impact Program, and under this program, there's a cap. And what it essentially does is that 2% of the withholding tax receipts that the state receives every year gets set aside in a fund. And quite honestly, I don't know all of the programs that the Department of Commerce can use this $20 million for, but I think generally it's for job creation, job enhancement, training, things of that nature. But there is a $20 million cap annually for that. So that's going through things very quickly, and I'd be happy to answer any questions or come back if you have categories where you want to get into much more detail.
Thank you, Mr. Secretary. Committee, are there any questions? All right. Looks like you've done an excellent job. If you do go through this report and you think of things that you'd like to dive into greater detail, especially if it's sales tax exemptions or situations like that, be sure to let me know. Representative Howerton.
Sorry, is it too late to ask a question? We're pondering something.
Okay.
Okay. On page 18, on the top line, It says property purchased by Habitat for Humanity for use within a housing project. Do you know what that housing project is?
I'm sorry, could you
Spec-
repeat that again?
On page 18, the very top line, it's 1.02 million, I think.
And
Is it,
the question again?
yeah, the housing project, do you know what that is specifically?
I don't think that's one project. I think that's anything that is a housing project, if that's,
So so it's not the community land trust, it would be projects?
I
We just
don't
had a.
think so. It would be the materials,
The materials.
yeah.
Yeah.
Okay, thank you, just clarifying that, thank you.
Representative Alcala?
I know that Habitat for Humanity is doing a housing project in my district. They just had a community meeting this past summer, and it's low to moderate income housing, and I couldn't tell you how many units it is, but it's in property that they presently own, and it would be in North Topeka. But I'm sure that's a wider project maybe, but I know that's one they're doing in my district.
Yeah, and that type of project, the material component would be exempt, and assuming they're building something new,
Thank you for that clarification.
that labor is exempt as well as original construction labor. So no tax at all on anything.
That's right. And we have had a bill on labor to renovate or do, because that labor is not sales tax exempt. We had a bill on that a couple of years ago, I think. Representative Smith?
Thank you, Mr. Chair. Mr. Secretary, thank you. I thought I heard you say that a 501c3 has to be reapplied every 5 years. Is that correct?
Right, when we issue exemptions to entities, they have to renew every 5 years. We have an individual within the department, that's what they do. So really, every 5 years, there's sort of a reexamination to make sure that their business practice is still what it was originally, and it hasn't morphed into something else that maybe is not.
I like that because the project may be over with and they shouldn't be getting it. So that's a good thing. Thank you, Mr. Chair.
Kathleen's indicating it's actually 4 years.
Mr. Chairman and members of the committee, Kathleen Smith with the Department of Revenue. It's actually 4 years, so every 4 years they have to reapply, and we check everything to ensure that they are still remain in that classification for that statute. They meet the requirements, and then we issue the tax exempt entity certificate.
Thank you. Representative Alcala?
Representative on the Habitat for Humanity, they are in the audience. So after the meeting, the young lady sitting back there with the gentleman blue tie. If you have any questions, they can give you more detail than I could.
All right, committee, any further questions? Yes, Representative Smith.
Thank you, Mr. Chair. Maybe this is for you. With Mr. Helgerson, we were talking about looking at that 501c3, and if we found that one maybe is not what we want, let them expire and then not renew it. Just a thought. So thank you very much.
All right, any further questions? Last chance. No, it's not your last chance. Mr. Secretary, thank you very much for going through an extensive report, and Kathleen, thank you for the phone a friend opportunity. Yeah.
I do have a couple of responses real quick.
Okay.
On the state municipal bond interest, that is basically interest that is earned on obligations of another state or municipality. So they have to add that back if it's not included in their adjusted gross income. And I think someone else had asked how many C corporations we have, and that's approximately 23,000.
Okay, very good. Excellent data. All right. Mr. Secretary, Kathleen, thank you again for your presentation. I'm sure there might be some more questions forthcoming, so if we need to invite you back, I'll stay in touch and give you that information. Okay. Committee, that concludes our business for the day. So thank you for your attention, and we are adjourned.